Housing market forecast. How are things shaping up for 2024? Is it going to get easier for buyers, or is it still going to be a strong seller's market? That's what we're talking about today. Hi, Jessica here with the Genung team and Real Broker. Housing market stats and forecast opinions are some of my favorite topics to discuss. I put out this annual housing market forecast video every year. I also think it's interesting and kind of fun to look back and see if some of the forecasts from big companies in our industry were right or not. So let's start by taking a look back at my last forecast video for 2023 and see who got it right. These numbers are for the entire US housing market, by the way. We'll look more locally in just a minute. So what happened this year with home prices? Drum roll, please. Median sales price for the US started 2023 at $348,000, and the latest stat, according to Redfin's data in mid-December, has the sales price at $365,000, which is an increase of 4.52% year over year. The closest company to correctly predicting the actual market results was CoreLogic. This is a slide from my last year's housing market forecast. Who is CoreLogic, you might be asking? They are a company that is based out of Irvine, California, that provides financial, property, and consumer information, analytics, and business development. CoreLogic is highly respected in our industry for data analysis and the information they provide. CoreLogic was the closest out of these half dozen companies that we listed, and Realtors.com was the next closest. Interestingly enough, CoreLogic was also the most accurate predictor in 2022 because they predicted the smallest percentage of year-over-year home price growth. In 2022, CoreLogic predicted 2.5%, and the actual increase was 2%. The next closest was Realtor.com, who predicted 2.9%. Are you seeing a pattern here? So these two companies were the most accurate 2 years in a row. Good for them.
Oh, I know, I'm good for them.
Redfin, as you can see, was the worst predictor of home prices in 2023, saying prices would decline year over year by 4%. This was a very bold prediction on their part because it is historically quite rare for home prices to decrease, even in recessions. It does happen, of course. We all remember 2008, but it's rare. My personal opinion of why they were so wrong is that they let their personal business results weigh too heavily. Redfin typically posts a net loss in the tens of millions of dollars every quarter. They had agent layoffs this year, and they lost a little bit of market share as well. I don't necessarily blame them because at the end of 2022, the market was certainly stalling and there was no talk of interest rate decreases anytime soon. So it's natural to think that prices could decline. But enough about what happened in the past. Let's look forward to next year. But before we do, I feel compelled to offer a word of caution. In my forecast video last year, we walked through this Fortune.com article that discussed the price forecast for 20 companies. I mostly discussed the companies I felt were the most reputable, and I want to point out that 14 of these 20 companies thought that home prices would decline, and 7 of the companies thought there would be a housing market crash of 20% or more. Many of these companies are banks more focused on retail and Wall Street, so I do not think they have as good a pulse on the housing market. Sorry if I'm beating a dead horse, but I think it is so important to look at the data and keep hopes and emotions in check. Maybe you caught my last market report video where I discuss a recent poll that says that many people think the housing market will crash in 2024 and how many want it to crash. As a real estate investor myself, I wouldn't mind for real estate to go on sale, but that doesn't mean it's realistically likely to happen. I don't want you to make decisions based on hopes and fears. I had many buyer clients over the past few years that were priced out of the market because they were scared of an upcoming market crash or unrealistically hoping for one.
Waiting.
On the forecast video last year, I was sure to point out my personal thoughts on the 7 doom and gloom companies that were predicting a 20% crash. Just ignore them is my advice. Let's look at this clip from my last year's forecast. Zelman and Associates, I'm somewhat familiar with her. I used to watch this YouTube channel called Wealthion for a while. I don't know if you guys have seen that one, but she's often on that. But I actually stopped watching them because I just thought that they were too gloom and doom, and they're wealth advisors, and I just kind of felt like maybe they might have motivation to always be talking about things crashing, like, oh, if you move your money to us, then you'll be safe from this crash. So they were too gloom and doom for me. But she thinks her Ivy Zelman is her name. She's predicting that home prices are going to fall in 4% in 2023 and another 5% in 2024. And now, back in the summer, she was
predicting that. Now, as of November, she is predicting that we could see a 20% peak to trough decline. So, like I said, typically doom and gloom when I have seen her.
Ivy Zellman was off by 25%, and this is someone that I originally thought was smart and worth watching what she had to say for a time. Don't fall for it.
Oh, don't look at him. Look at me.
Don't waste your precious time like I did. I'm guilty of it too sometimes. 2024, we are moving on. Let's look at some credible opinions. Here's the latest from National Association of Realtors Chief Economist Lawrence Yun. Inflation notched down to 3.1% in November despite the incomprehensible rise of nearly 7% growth in housing rent. Once rents decelerate into a more realistic 2% to 4% rise in upcoming months, no doubt due to the oversupply of new apartments hitting the market, then the overall consumer price inflation will be under the Federal Reserve's desired inflation rate of 2%. At that point, there is no excuse not to cut rates. It's interesting that he mentioned the oversupply of new apartment units. There is a massive amount of new apartments under construction in Murrieta currently. I discussed this in my last video, which is an updated Murrieta pro-cons video. I can think of at least 750 units that are currently under construction in Murrieta and another over 800 units that are scheduled to break ground late 2024. That's just off the top of my head, and this is just Murrieta. I know of a few new apartment projects also in Temecula, but it's especially apparent here in Murrieta. If you live in the Temecula Valley, Temecula, Murrieta, Menifee, Winchester, etc., let me know down below in the comments. What are you seeing as far as new apartment construction, and what is your thoughts about that? I have some concerns about this that I discussed in my last video, but I won't rehash that here. More apartment units could loosen the housing supply, and rates are on a downward trend as well. Back to Lawrence Yun, Chief Economist for the National Association of Realtors. He says, knowing these trends, the bond and the mortgage market have already pivoted ahead of the Fed. Mortgage rates have come down for the 5th straight week. Even further declines are possible once the Fed actually does cut its short-term Fed funds rate. Mortgage rates will slide under 7% next year and may reach 6% in a year. We are actually already seeing some rates under 7%, and I agree that 6% is very doable. I won't be surprised to see rates in the high 5s by the end of 2024. The National Association of Realtors predicts 4.71 million existing home sales in 2024, up 13.5% from 4.1 million anticipated in 2023. What does CoreLogic think will happen in 2024? Since they've had the most accurate crystal ball and they've gotten it right 2 years in a row, they have my attention. Slow but steady increases is what they say, and this is my sense as well.
Gentlemen, you had my curiosity, but now you have my attention.
CoreLogic projects that annual home price growth will relax to 2.9% by October of 2024. This is a little bit contrary to the current real estate industry sentiment. I hear a lot of leaders in our industry saying that the housing recession is over and we're full steam ahead through 2024 to 5+ million sales in 2025. I agree that sales volume will be up in 2024 due to the pent-up demand from buyers that were priced out from the higher interest rates, and I think that we'll see an increase in supply as well. The lower rates might encourage more move-up buyers to list their current home in order to purchase their new home. I have several clients in this boat that want to move to a better location or a larger home, but the 8% interest rates put that plan on ice. These sellers and would-be buyers may enter the market this year, which would increase our inventory for sale, but it will also boost the demand. I feel a little bit more optimistic than CoreLogic's 2.9% prediction, but I'm going to tamp down my optimism a bit since CoreLogic has been pretty right on the money the last couple of years. Realtor.com, as discussed earlier, was the second most accurate forecaster in the last 2 years. They have a cloudier outlook compared to CoreLogic's predictions for national numbers. Nationally, Realtor.com predicts home price appreciation will fall 1.7% in 2024. They predict inventory will drop by 14%, which is a very bold prediction. They only predict interest rates to drop by 0.1% to 6% 6.8. I don't agree with this, but time will tell. However, Realtor.com's forecast is more sunny for the county of Riverside and California as a whole, specifically Southern California. 5 of this year's top 10 metro areas are in Southern California, which is projected to perform better than the state as a whole. These markets will see estimated average sales growth of 13.1% in 2024, compared to a sales decline of 4.1% for other California areas in the top 100. So Realtor.com is saying sales volume, or the number of homes sold, will be up 13.1% in our county. They also forecast home price growth to be 2% in Riverside County, which is number 5 on the list of the 100 top metros in the US. That's pretty sunny for our area, despite only the 2% sales price increase forecasted. On a side note, I have noticed over my years of selling real estate in the Temecula Valley that our area seems to pop higher when times are good and fall lower when times are not so good. My opinion as to why is twofold. Our housing inventory tends to be newer than the surrounding counties, and the majority of our neighborhoods are not as established compared to typical neighborhoods in Orange County, San Diego, and Los Angeles. Also, we are more vulnerable to economic downturns because we don't have as many large employers within a short commute. These are the reasons we fall when times are not so good. When times are good, and especially when homebuyers have the option to work remotely, of course, lots of folks in neighboring counties such as Los Angeles want to move here because you get a lot more bang for your buck, and our quality of life is generally better in the Temecula Valley when you factor in traffic and other issues expensive and crowded counties like LA face. So, slow and steady growth for both home prices and number of homes being sold is what I'm predicting as well. What say you? Let's take a poll down below in the comments. Do you think sales price will increase or decrease in 2024 in the Temecula Valley? And do you think more or less homes will be sold? Thanks as always for watching, and we'll see you next week. Bye.